Looking at our top story, Coinbase is one step closer to going public. The financials of the largest crypto exchange in North America can now be viewed by the public for the first time on the U.S. Securities and Exchange Commission website. The Form S-1 tells us Coinbase had a good year in 2020, including $322 million in profit, $193 billion trading volume, $90 billion in assets in custody, and CEO Brian Armstrong, who we see here, made about $60 million in compensation, almost $2 million of that going to his personal security alone. Coinbase will be listed on the NASDAQ as Coin, fittingly enough. All right, so joining me now to discuss from Puerto Rico is GSR Markets co-founder and president Rich Rosenblum. Welcome, Rich.
Hi, thanks. Good afternoon.
Good to have you here. All right, so is the latest Coinbase news responsible for the modest uptick in Bitcoin's price we saw today?
I think there's so many factors driving the price. It's hard to say. I'd say it's probably why the Binance token, BNB, has gone up in sympathy. It's sort of a proxy for Coinbase stock. But in terms of what's driving the price, it was one of the factors that would bring it up. But I think just a lack of selling and a bit of reduction, cleaning up in leverage would have also given some support to prices. So there's a lot of factors.
Yeah, we did see some trading volumes coming down. But focusing on Coinbase, what is the significance of this exchange making headway towards an initial public offering as it relates to Bitcoin?
I'd say people, especially from the traditional space, will look at the multiples and dig into the asset itself. But I think this is really a story about it being quite early in the innings for crypto, for Bitcoin, for our industry. And looking at the companies in the space, there's a lot of important, fantastic institutions, but very few were around in 2012. So I think being such a bellwether of the space and not having many missteps, it's that brand value. And also, I think that on a big picture, when you're in an industry and it's super early, as it is in crypto right now, look at Tesla. People doubted Elon. People doubted that electric car company that wasn't able to deliver exactly on time should be able to achieve such multiples. Now suddenly value was achieved last year. You had a 700%. So that's self-driving cars, and ended up was more of a software issue than people expected. And software's eating the world. Look at crypto now. They have software is eating the world. Finance is dominating. Crypto is a combination of the two. And in terms of Coinbase, even at 70 some odd billion, that's still 1/10 of self-driving car company. Here we have self-driving finance, which I think is a much bigger category. So I think while it sounds expensive, I have pretty high confidence that in 2 years it's going to be listed higher. So there's volatility, especially in its underlying assets such as Bitcoin. And hard to say what's going to happen on the day of launch, but I do think in the ensuing months and years it'll be significantly higher.
Rich, interesting, just taking a look at the S1 form, Coinbase has said that they anticipate operating expenses to increase significantly in the foreseeable future and may not achieve profitability or achieve positive cash flow from operations on a consistent basis. For instance, although they generated net income of $322 million in 2020, they incurred a net loss of $30 million in 2019. Rich, to me, this sounds like Coinbase profits mirror the volatility of the crypto markets. But what do you make of that statement?
I think that a warning that we might not be profitable in the future is taken as a negative sign in many cases. In this case, I think it's more that in seizing the opportunity effectively, thinking that the space is going to 10x or maybe 100x. It echoes what I think it was what Mike Novogratz mentioned in 2018, that if you're doing it right, you should be losing money in the bear market because the market opportunity is so big. It's not one where you're going to just go with organic growth. So I think when they're trying to seize a multi-trillion-dollar opportunity set, they shouldn't be focused on profits for the next quarter, probably not for the next few years. I think they're chasing the big elephant at the fair.
Coinbase also identifies risks in this S1, including the identification of Satoshi Nakamoto, the pseudonymous person or persons who developed Bitcoin, or the transfer of Satoshi's Bitcoins. Why would that be a risk factor?
I think if you've read one of these before, you know that there's a absolute laundry list kitchen sink. I think this one, it's a little bit tongue in cheek because, it's a mystery that's been pretty unsolvable for a dozen years. But I do think that it's not a pure joke. There's regulatory implications that if you knew who profited, it could potentially make Bitcoin, in some people's eyes, more likely to be seen as a security. And even though they do have BDs, they could eventually have security tokens. If it was an illegal security for all these years, it would be a risk. But in my knowledge of the situation, I think it's a de minimis risk. It's just one of a fountain of many that need to be on these type of lists.
Great. Well, you mentioned a laundry list of risk factors. I'm just looking at other ones. Negative perception of Bitcoin or Ethereum could be one. Unpredictable social media coverage or trending of crypto assets, as well as decentralized finance. So you are right in that there are a lot of risk factors. But thank you very much, Rich, for joining me and sharing your insights on Coinbase and how it relates to Bitcoin.
You're very welcome. Thanks for having me.